Hi, this is Joe Rabil with Invest Like a Pro. What I want to do is I had a question about a Forex trade and actually just kind of giving an example of a Forex trade. And I'm using Euro USD. I just want to give you a couple examples of trades. And I do believe that my book, as well as my course, it is applicable. There are some minor differences when it comes to the ratio. You want to use a 1 to 5, 1 to 6 for the ratio. As long as you're following that, I think pretty much everything else remains the same. I'll show you a few small differences that I noticed when I was looking at this market. Let's go ahead and get into these examples. So I've got a buy signal and a sell signal that took place. Now I've got a 3 hour on the bottom left. I've got a 30-minute in the bottom right. I've got a 5-minute in the upper right, and then a 1 minute in the upper left. Now, for those of you who are stock traders, there's still some things you're going to learn from this. So don't think that this is not for you, because we can always learn from every single trading play that we do. So if we look at what happened here, we had this move, pretty strong momentum characteristics on this move. This is our classic strength, taking out these highs, and then we get the pullback. And obviously there was some overrun in MACD during the pullback. Okay, so what do I say when I get overrun? I don't want to take the first signal to the upside. I'm not interested in taking this. I'm looking for the second one. And in this case, it would have been, coming back up this one. So I wanted to point that out. Same thing as we do in the stocks. And in fact, let me just show you this. I haven't tested this, but I bet it's pretty close. Well, it did get through the 50% retracement, not on a closing basis, but it poked up through there and then reversed back down. But either way, I mean, typically what I'll see is a move down and then a retrace right around the 50% mark. And sometimes it overruns like that. And then we get a pullback and test the low. And as we come back up, that's really where I'm interested in this. So we saw that take place. Now let's go to the green arrow on the 1 minute chart. Now, if we see what happened in this time frame, we had a move into the zone and a move out, right? So what does that mean to me? Well, when it goes into the zone and comes out and goes to a new low, that means that I have to be more patient. I'm not looking to take the first signal or even the second signal. I'm really looking to see green start to get going again. And it does that, but then on the pullback, it overruns both moving averages. So if this would have come in here and done like a pinch play here after showing green again, that would have really intrigued me. Now, it did end up doing a zero line reversal. I do think that is the trigger there. That was a nice setup, and you got a green bar to follow it. I don't think I would have taken that, though, because of how much overrun we had here, and it was a little quick in the way that it played out. But then look at what happened after. Let me zero in. You see this pinch play that developed right there? That was beautiful with green holding, and you would have had your nice trade. And the thing is that if you're going to do this type of trading, I think you have to be ready to take targets. And when you get a big green bar like this one, massive green bar. So you make this move to the upside, and then the biggest bar in the move is right there. On that bar or the following bar, you want to be looking to exit, take profits or something like that. Now, if you would have only taken partial profits, you would have gotten a pullback, and then when it came back up and tested this high, you would have seen it just looked like the momentum was slowing, starting to die a little bit. So any ensuing weakness from there would have been the exit signal. Now, look at what happened after. Let's go back to our five. Well, first of all, let's look at the 30-minute chart. We had this breakout pattern, but ADX couldn't get above 25. It had an opportunity, even pulled back, tried to push up here, and ADX never climbed, and DI just barely got above 25. So we know that's somewhat of a warning signal. Now let's go to the 5-minute and look at what happened here. We broke the uptrend line, number one, okay? On the way down, we had a lot of momentum to the downside, but because ADX was so strong to the upside, it was lagging. You see how that lagged? You couldn't really didn't get a clear signal in ADX. That's going to happen sometimes when you get a vertical move and then a vertical move, vertical up, vertical down. But MACD divergence at the peak, okay? And look at the overrun of the zero line to the downside. Now, where this rallied up to the 18 and the 40, it wasn't a pinch, but it was a zero line reversal. This, I would classify that as a zero line reversal setup. So we look at that, we get rally. So as we're approaching the 18 and the 40, we want to go down to the smaller time frame. And let's zero in on this. Now look at what took place on this. We had a move to the upside, a pullback, and then another new high. And then we kind of fiddled around a little bit. It then made a pivot low and made another new high. So we had the ability to draw in a trend line. All right. Now, this trend line, how do I know this is the right trend line? Well, it's parallel to the 18. We know that's a quality trend line. I do, at least when I'm looking at this. I like that one a lot better than drawing something down here like that. To me, this is a lot less meaningful to me. This one is telling me that the this specific time frame's trend is probably going to break if we take out this 18 and this trend line. Now, because there was so much overrun and because there was enough strength here, we need to see. Now, this is different than what I was just talking about on the last trade, where we actually got in the zone and went to a new low. Okay, that's a lot different than this. We did not do that in this case. We didn't go in the zone and make a new high. But we did have enough strength in the rally that we need to see some DI to show up. We don't need the ADX to really kick in, but we want to see a little bit of improvement or just look for the second entry signal. First entry signal would be the crossover to the downside. The second one here is the pinch play. And here's the beautiful pinch play that sets up two higher lows. We got a pinch here, red DI even starting to kick in again, and then we get the ensuing decline. So just based on my experience in going back through these trades, and we even have another setup. Look at what happened here on this 1 minute. We had another rally that took place on the 5 minute, and then look at how this rallied up. You see how this made this move to the upside, and green DI caused the ADX to move to new highs above 25, I mean. And then look at how this played out, and it kept chopping around, and the ADX kept dropping. Look at how that dropped like that. So we want to keep our trend line. So the way I would actually look at this is that this was the high and this was the anchor point for the trend line, because we never really made a significant new high. But look at what happened. If we draw in this trend line, it actually fits perfectly. Even if you raise the trend line when this went to a new high, it was the same level. It's the exact same trend line. And look what happened. We broke it, came back and tested, and then coming back down through here is your signal to exit to the downside. Red DI was starting to kick in again. MACD was starting to cross back down. It even had a little pinch play to the downside on this rally. So I don't know. I mean, I see these patterns and they look pretty similar. Now, one thing I do notice is ADX, sometimes you have to watch the wicks on these. You see how there's a lot of wicks in these patterns? That's going to have an effect on the ADX. And you can see how much of a lag it has. All right. There are times. Now, there are other times where maybe there's not as much. And if you don't get a lot, if you don't have a lot of wicks, then it won't lag as much. This can happen in the stock market too. But it just seems like when I went through and looked, this happened maybe a little bit more often than in the stock. So you want to be aware of that when that's showing up. The ADX is not going to be as helpful in that case. Lean more on the price action, lean more on multiple time frames, lean more on the MACD and the moving average environment. But overall, I don't think there's a significant difference. I think the signals that I use are going to work in the Forex markets. All right. Let me know if you have any questions or comments. Thanks.